Hi, and welcome to the Market Alert for Monday, the 6th of September 2021. So I'm glad to be back. It doesn't look like I've missed a lot, particularly where the volatility is concerned, and the Dow seems to have been sideways all week, which is characteristic of the last week of August going into September. And then, of course, today it's a holiday for the US. It's Labor Day, so again, it's all electronic for the US for today. But Friday, gold and crypto jump as dollar, bonds and stocks dump after big jobs miss, which was quite interesting. I like this as well here, taper off. Yeah, it wouldn't surprise me one bit, to be honest with you. Goodbye taper, huge jobs miss as US adds just 235,000 jobs in August. And if we have a look at this, you can see here, I mean, you've already seen this, but for me, I'm playing catch up at the moment to have a look. Massive miss as far as the jobs are concerned on Friday for the non-farm payrolls, which is certainly indicated here. 235 forecast, 720 before 1,053,000, so massive miss there. Which was interesting. Other news over the weekend, world food prices jump in August to near decade highs. You can expect more of this heading into the fall, autumn. Soaring inflation shows no sign of abating and may worsen. It certainly will, especially in the UK with the HGV driver shortage. Entering a stagflationary hell, Bank of America warns only the biggest ever bubble is delaying catastrophic recession. Great, this is actually the biggest ever bubble is delaying a catastrophic recession. I would actually supplement recession with depression when this is allowed to fail. At the moment, it's still being held together. As I said in the intro, implied volatility, very, very tight range for last week. And the lower this goes, the more it coils, the bigger the correction will be. And another headline here that I obviously just missed, can the bulls defy the odds of September weakness? Well, that comes back to holding the bubble together before we get the depression, isn't it? You know, this time is different only because the variables are different. Of course, the variables always are, but the outcome's always the same. And the outcome being eventually everything corrects to fair value, if allowed to do so, of course. So yeah, that's the news for last week. Let's have a look at this week. As I say, today is Labor Day for the US. Markets closed, electronic session. So if the market picks a direction, generally we'll take that direction during US holidays. What have we got for this week that would move the markets? We've only got ECB press conference, the criminals back to work then on Thursday, but really nothing major that I can see there at this time. There's a few minor central bank celebrities speaking, same as we've got Williams speaking for the Fed. So not a lot really for this week as far as major news is concerned, economic news. So let's get on and have a look, see where we are with regards to the markets. And last week, well, the last couple of weeks now, you can see that the Dow is stuck in a sideways range. It's actually showing what I would call an ascending triangle formation, where prices are producing this triangular shape. As a rule, they tend to break to the upside. As a percentage basis, they break to the upside. So we'll see what happens. And if they break to the downside, then it's pretty fast if it does break on the downside. But you can see that pattern there. Friday, you can see the sell-off continued all the way through the session, and then eventually, obviously, the plunge protection team coming back in. Actually, these figures aren't as bad as we thought, and they bring the market back. You can see we've got an 89% retracement back to the 200 MA in the 30-minute chart, and then prices moving down again, 89% retracement before moving back up towards the DP there. In the German DAX, we can see also prices sideways, not a clearer pattern as we've got in the Dow, but trying to move back to the upside. Not a great deal of volume for Friday coming off the lows. You'd expect to see a bit more, but then again, if it's following the plunge protection and the Dow futures electronic market, then you can expect to see that they can move the market back up just by pricing it back up as opposed to any sort of genuine buying. The market again looking bullish at the moment as I record, as they try and bring the market back from the disappointing non-farm payroll figures for Friday. You can see the market heading to 38 at the moment. It's below the 5 bar and the 20 bar moving average at the moment. These need to be taken out if the market is to move or advance back to the upside. Notice also how the market stopped at the 89% retracement before finding weakness in the week there. That would be Friday, Thursday, Wednesday, Tuesday when the market actually showed this retracement to the 89% and fails, and that's something I'll be looking for in the DAX in the daily chart for sure. In the 30 minutes you can see the effects of the non-farm payroll figures, but notice how they bought back in here on Friday to bring the market back up before the close. The moment the market above the DP in the 30-minute chart, so we've got Friday's high there, which was put in before obviously the non-farm payroll figures were released at 1:30. Overnight prices sideways to high. You can see this again just trading above the DP there in the 2-minute chart. A bit of buying coming into the market here also as prices attempt to hold and move to the upside. Meanwhile, in the metals, we'll start off with silver. The market putting on a lot on Friday. It's been allowed to move to the upside. Did see a report where the lowest number of short positions recorded for many years is showing at the moment, which fingers crossed indicates that the banks now are going to try and switch positions as opposed to slamming prices. I mean, created the shakeout a couple of weeks ago down to 22.32. The market now moving and advancing back to the upside. We're not out of the woods yet. You can see the market trading just up to 62% now, just above that. We've got to get above the 78, 89 and the 200 MA before we can say with any sort of certainty that the market is starting to move back to the upside. At the moment it's broken out again in that sort of ascending triangle formation, but needs to make an advance through this selling to the left. In the gold market, a similar picture. You can see that we just have a extend this across. You'll see the market stuck at this resistance. So 1832 is major here. This needs to be taken out with significant buying to the to get through the resistance there. And then finally in the dollar, this one's going to come off the board this week. This is the September contract for the dollar index. We can see again the market's retraced here from this low to this high, again finding that 89 support there, having broken the previous one which I've just removed during last week. But this an interesting one, found some demand there as well and attempting to move higher. Needs to fail at the 5 bar moving average and reverse, and then take out the low to the left of 91.73. It'll be interesting because there's certainly weakness around now in the US dollar, and if we have a look at the gold silver ratio, you can see this has dropped back from 78 down to 73. I took advantage of this, as I said a week ago, bought more physical silver as it's a great deal against the price of gold, and bought a bit of gold as well. Seems to be a lot of thing with banks again muting about problems in the banking system, so it just seems wise to not keep everything in there, as the interest rates are so appallingly low as well. And gold, if you go back and check the figures over the last 20 or 30 years, have produced a 10% return on average as well. So again, it's a no-brainer really. Become your own central bank is what I would recommend. especially going forward once they introduce the centralized cryptos, because that's where it's all going with this COVID nonsense. That's how it's being used and engineered with the World Economic Forum and the centralization of power. If that isn't blatant to see with vaccination passports, which have got sod all to do with health, then you're not looking in the right direction of what really is going on. As I've said before, and I've said it for the last 18 months, the COVID or the grabbing of power is to reset the financial system. It's being used as a red herring. Anyway, enough of that. That will do it for today. Like I say, the US's Labor Day celebrations today, so the US should be fairly quiet. All government bonds, etc., are closed, so the market's got to make its own direction. Okay, that's it for this one. As ever, thanks for watching. See you in the